Hello traders, Gary Wagner here. It is 12:50 in Honolulu, 5:50 in New York on Wednesday, 14th day of December 2022, and this is the Daily Report for gold and silver. Today, the Federal Reserve held the last FOMC meeting of the year and, as expected, raised rates by 50 basis points, the first rate hike reduction since the last three consecutive 75 basis point hikes. However, Chairman Powell, along with the dot plot and the economic projections supplied by the Federal Reserve, indicated an extremely tough time ahead, with interest rates staying exceedingly high throughout 2023 and possibly into 2024, because the belief by the Federal Reserve is that inflation will remain persistent throughout next year. That took the dollar, gold, and U.S. equities lower. Gold, basis the most active February contract, is currently fixed at $18.80, which is a decline of $6.70. The dollar added value because of its weakness today, but not enough value for gold to close in the positive. The dollar index is down by 0.33% and fixed at 103.595. There was one exception to lower precious metals pricing, and that was silver. Silver did close higher today, gaining 0.75%, with the most active March contract currently fixed at $24.17. The talking points delivered today during Chairman Powell's press conference delivered roughly the same message that he did in Washington a couple of weeks ago. However, when he spoke in Washington, it seemed as though market participants, investors, and traders focused on only part of the message, which was the Fed felt that it is likely that the best action is to slow the pace of rate hikes, while ignoring the fact that interest rates would remain high for a much longer period than the Federal Reserve had anticipated. The chairman almost felt uncomfortable, it seemed, because he had a hard-hitting, difficult message to convey, and he did it quite well. Also, he was supported by the economic outlook that was published on the Federal Reserve's website. Approximately 1 hour before the FOMC meeting concluded and the statement was released, traders did have a round of profit-taking, which resulted in today's intraday low of approximately 1805. Gold is currently trading at 1818. And in terms of levels of support and resistance, we do believe that there is minor support at the 200-day moving average, 1797 and change, and major support starting at 1785 down to 1753. These two levels are Fibonacci based. In terms of upper level resistance, of course, yesterday's high at 1837, with resistance still between that and 1825. The double top that we spoke about, that has yet to be breached on a closing basis, and major resistance at 1883, which is the prior top that came before the top that occurred in August. I believe that once his statements sink in, it could take gold pricing lower, which is why I am anticipating some sort of a correction to a minimum of 1785, but more likely somewhere around 1760 to 1750. This being a line in the sand, because I don't believe we will see a correction that goes beyond that, but it could provide us with an excellent opportunity to re-enter the market from the long side. There continues to be a tremendous disconnect between how gold and silver prices are moving. Gold lost ground today, while silver gained ground today, trading up on this day to about 24 and change. It is currently at $24.15. In terms of my projections, we could run into resistance at about 24.25, We did see highs come in yesterday above that, and that is based upon a Fibonacci extension that we created, in which we looked at the preceding rally, which was of course much slower, this area here, and then we started it from the conclusion of the correction that occurred after. Our target is a 1.618% extension of that move. While it could move higher, I believe that it's likely on a technical basis that we see some resistance come in here. It might be shallow, and then a return to higher pricing. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.